Hey everyone, this is the second video, and if you haven't seen the first video already, please go check out. It's in the law playlist. Continuing it, classes of companies. A company may be incorporated as OPC, one-person company, or private company, or a public company based on the number of members, and it can also be based on shares and guarantee or both. There are different types of companies, and we are going to learn about them one by one. On the basis of incorporation as in starting a company, statutory companies and registered companies. Statutory companies, if the companies were created by a special act of legislature, example, Reserve Bank of India, State Bank of India, Life Insurance Corporation, Industrial Finance Corporation. These are such special acts of legislature. These are mostly concerned about the public utilities, and these provisions of Companies Act 2013 will not be applied to any of these acts unless it is specifically mentioned that it has to be applied. Registered companies. There are companies which are formed and registered under Companies Act 2013 or any other previous acts of Companies Act. So here we have in incorporation two types, statutory and registered. Statutory means any special act of legislature like RBI, LIC, SBI, and Companies Act provisions will not be applied unless it's specified. Registered company means if it's formed or registered under Companies Act 2013 or any previous Companies Act. And the next one is on the basis of liability. Here we have three types: company limited by shares, company limited by guarantee, and unlimited company. Company limited by shares. When a shareholder has unpaid amount of shares, then by its MOA, that is Memorandum of Association, that unpaid amount of shares will become his liability. His separate property cannot be used to clear company's liability. And coming to the company limited by guarantee, when a member undertakes guarantee to contribute assets of a company at winding up of company, then he will be liable to the only amount that he undertook as a guarantee. In the unlimited company, liability of member ceases when he ceases to be a member. Ceases as in stops, exit. There will not be any limit on the liability. As soon as you leave the company or when you cease to be a member, then there will be no liability on you. The liability of each member extends to the whole amount of company's debts and liabilities, but he will be entitled to claim contribution from other members. On the basis of members, one-person company. The name itself says that this company has only one person. This was introduced in India under Section 2, Subsection 62 of Companies Act 2013. This is nothing but sole proprietor form of business with the special effect of corporate framework. And one person means one person as a member. A company formed under one person may either be a company limited by shares, limited by guarantee, or an unlimited company. One-person company is a hybrid of sole proprietor and company form of business and has been provided with concessional and relaxed requirements under this Act. One-person company means there will be only one person and he will be treated as one member of the company, and it can be on basis of shares, company limited by shares, by guarantee, or unlimited company, just as we discussed above, and it's nothing but hybrid of sole proprietorship and company. Here are some features of one-person company. Only one shareholder. Only a natural person who is an Indian citizen and resident in India shall be eligible to incorporate a one-person company. The first feature is he should be a natural person and he should be Indian citizen and resident in India. Indian citizen and resident in India as per tax laws. Nominee of the shareholder. This one-person company should have a nominee. That means that one member have to place a nominee, and this nominee has to give his consent that he wants to be the nominee, where he can become the shareholder or member in the case of death or incapacity of that one person. And also this nominee should be Indian citizen and resident. Director. Every one-person company should have at least one director, and maximum can be 15 directors. Let's repeat once again. One-person company, 2 subsection 62. It's nothing but sole proprietorship with corporate framework, one person as a member. It can be company limited by shares, company limited by guarantee, or unlimited company. It is nothing but hybrid of sole proprietorship and company. Features of one-person company will be only one shareholder and Indian citizen resident in India. Nominee of shareholder, in case of death or incapacity, there should be one nominee. He should give his or her consent, and he should also be Indian citizen and resident. Director, one director is minimum and 15 directors are maximum. And coming to private company section 2 subsection 68. According to section 2 subsection 68 of Companies Act 2013, a private company means a company having minimum paid up share capital as may be prescribed by central government, and it restricts the right to transfer its shares. In private company, you can only transfer shares from one member to another member, not anyone other than member. Except in case of one-person company, it limits the members of its it except in case of one-person company. It means in one-person company you only have one member. In the case of all other private companies, the maximum number is 200 and minimum is 2 members, provided that where 2 or more persons hold one or more shares in the company jointly, they shall be treated as single member. If 2 or more persons hold only one single share, then it should be treated as one share. Jointly, then it should be treated as single share. Provided further that persons who are in employment of a company, persons who have been formerly in employment, were members of company while in that employment and have continued to be members even after the employment ceased, shall not be included in the number of members. Prohibits any invitation to the public to subscribe for any securities of company. There will be no public subscription of shares. Public company. According to section 2 subsection 71 of Companies Act 2013, a public company means which is not a private company, having minimum paid up capital as specified by central government, can freely transfer shares to any person, can invite public for subscription of shares, having minimum of 7 members, and there is no restriction on the number of maximum members, and it has to use word as suffix limited or Ltd. According to Companies Act 2015 amendment, it has omitted the rule of 5 lakh rupees or any such higher paid up capital. Small company. Section 2 subsection 85. According to section 2 subsection 85 of Companies Act 2013, a small company means company other than a public company. There are two conditions here: paid up share capital which shall not exceed 50 lakh rupees, and the paid up share capital amount specified by central government will not exceed 10 crores. And the second condition is having turnover of anything less than 2 crores or amount specified by central government which shall not exceed 100 crores, provided that nothing in this clause shall apply to a holding or subsidiary company. Section 8 company. Section 8 company means companies which do charity and such stuff, and company or body corporate by any special act. These are some two advantages of small company. First one is there will not be 4 board meetings. You only have to conduct 2 board meetings in small company. And the only condition according to this board meetings is that there should not be time gap of more than 90 days. And the second advantage is that we can skip the part of producing this cash flow statement with the financial statement. We can entirely skip this cash flow statement in the case of small company. And these are some advantages of small company. On the basis of control, holding company and subsidiary company. Holding and subsidiary are relative terms. And holding company means, according to section 2 subsection 46 of Companies Act 2013, company which have either control or significant influence in any other company is called holding company. Two important points: control or significant influence. And subsidiary company, section 2 subsection 87 of Companies Act 2013 states that company in which a control is held by another company is called subsidiary company. And how can you hold the control? A company can control another company by holding more than or equal to 51% of paid up share capital, or by controlling the appointment of all or majority of directors. 2 points: 51% of shares, or controlling the majority of board of directors. On the basis of listing in the recognized stock exchange. Listed company and unlisted company. It's very simple. According to section 2 subsection 52 of Companies Act 2013, a listed company means company whose securities are listed in recognized stock exchange. And an unlisted company, a company which has not listed its securities in recognized stock exchange. Simply other than listed company is unlisted company. Others. Government company. According to section 2 subsection 45 of Companies Act 2013, a government company means a company in which either central government or state government or both of them hold more than or equal to 51% of paid up share capital is called government company. Subsidiary company of government company is also a government company. Coming to foreign company, according to section 2 subsection 42 of Companies Act 2013, a foreign company means a company or body incorporated outside India. It's very clear. Any company incorporated outside India is foreign company, and which has place of business in India, whether by itself or through agent or physically or through electronic mode, and conducts business activity in India. Place of business in India by itself, agent, or physically or electronic mode.